Forex currency strength indicator revisited. So good afternoon, everyone. Futures Brizio here, 2:20 p.m. on Thursday, uh, February 19th. Hope everybody's doing well. Just quiet a couple of these other tabs. Hope everybody's doing well. Yesterday, I posted a video, which you can see, it was yesterday, on this currency strength indicator that I had found on in TradingView. Again, as you guys know, I trade futures primarily, but I do like to trade Forex, although I tend to stick to higher time frames, 12-hour daily chart, and just take swing trades. I don't want to spend a lot of time on Forex, especially with so many pairs. It can completely consume you if you're, trying to do that on short time frames. There won't be enough hours in the day, and you'll just end up being completely stressed out. And it's just not worth it. If you're going to trade on really short time frames on Forex, I would suggest just standardizing on 2 to 3 pairs, in your time zone session, and that's it. But if you're going to trade on higher time frames, like the daily chart, up around there, you can certainly incorporate a lot more, because obviously you're not going to get setups every day. In fact, on any given pair, you could go weeks and weeks without a setup because conditions are not right, or, especially if you're trend trading and the market's moving sideways, you're just waiting for a breakout, or you missed an entry and you're waiting for a pullback to get it. That can go on for a long time on a high time frame. But on the flip side, like I said, it allows you to follow multiple assets, because you really only have to look at the chart once or twice a day, depending what time frame you're looking at. And so that's that. So yesterday I talked about an indicator that I found, and it's called this one right here, Currency Strength Indicator CSA 5-Step System by LND Money. And one of the things I had commented on yesterday was the difficulty of using it because on the chart, this is what it looks like. And you can see, unless you really zoom in on your candlesticks, it's really hard to see these lines, at least the way I want to use it, which is basically finding two diverging currencies and trading them against each other, and which also can be used for re-entries into the market, in a trending market, can also help you with that. But, I don't want to zoom in on my candles this much, because then I have to constantly zoom back out. It's just a hassle. So in this respect, I didn't really find this to be too usable. I had talked yesterday about using just the Japanese yen, just going into the settings here and basically turning off everything except the yen, because that one seemed to be the most reliable signal in terms of how often it went into the extreme long, extreme short areas, and how reliable the follow-through signals were when it came out of one of those areas. And then you can match it up with one of the other currencies, that it's kind of going in the opposite direction to help use it, like I said, for re-entries into trends. But at the same time, I also didn't want to necessarily limit myself to the yen, because if the yen's not doing anything, or it's in this kind of in-between area, then, again, you could go a long time without a trade, especially on a higher time frame. So I said, well, how am I going to do this? Because, I don't want to zoom in, but I want to be able to follow all these currencies. And so anyways, I just want to show you that I reached out to a developer, a TradingView developer that writes script and programs for TradingView. And that indicator is an open script from the original developer. So, which means that the developer allows you to go in and modify and do whatever you want to the original script, because it's an open script indicator. And so I contacted the guy that's done some work for me before on a couple of other indicators, and I gave him this one. I said, hey, can you make this so that as I change currency pairs, that this will display the two lines just for those two currencies. So in other words, I'm on the Aussie yen. So right now, these two lines represent the Aussie and the yen. If I switch to, Kiwi, US dollar, now these two lines up here represent the Kiwi USD. And I also, if I wanted to, I could also set this so that it appears overlaid on the chart instead of in the pane above. I don't know if I can do that quickly from here, but yeah. So I could also do it this way where it appears right on the chart in the, basically as an overlay. It's a little bit busy here. I thought at first this is kind of the way I wanted it. But it's a little bit too busy. So I think I do prefer it to be on the top so that I can still see the clean price action and all the structure levels. Now, nothing else is any different. I'm still got Heikin-Ashi candles here. I'm still primarily trading in the direction of the trend, but this can help you find entries, especially in the direction of the trend. But it can also help you if you wanted to trade even pullbacks and reversals. You theoretically could do that too. So here's an example, and this is the 4-hour chart just for ease of demonstration. I don't usually trade on this low of a time frame, but just for ease of demonstration, I just wanted to use the 4-hour. And so here's the Euro Aussie. So in this case, the orange line is the Euro and the blue line is the Australian dollar. And you can see right here when they cross it. Now we're in a downtrend here. And you can see right here, these two lines cross each other. You can see just prior to that, they were diverged from each other, right? The Euro was up here and the Aussie was down here. And that's represented by this pullback. And then, we know we're in a downtrend here. So the primary signal we're waiting for is the Euro to begin to weaken again and or the Aussie begin to strengthen again. And right here, where these two lines intersect, if you look down at the chart, is right on this candle here. And this would have been your entry. And it would have been a beautiful entry. You would have had basically no drawdown at all, and the price went down. Okay? And then in terms of pullbacks, now you could trade pullbacks too. You can see right here, okay, the Euro strengthened a little bit and crossed over the Aussie right here. And you can see you get that signal right about here. And the market does go up. And then eventually it turns and goes back down again where the Euro crosses back through. Okay, and then there's another sell entry right here. Again, we're primarily looking in the direction of the trend. Now, the best signals come when this thing diverges. So again, we look right here. Here's the next one, right? You can see these two are pretty far apart. We still are in a downtrend. You can see that the Euro here begins to strengthen, okay? And then right there, it crosses over, and then the Euro is strengthening, and the Aussie is going down, and there's a pullback, a really good pullback entry. And you could have traded this. This is a 4-hour chart. So this is basically one trading day here. It looks like about a half a dozen candles. And this went up. Now, it's against the trend, but it's a reliable signal because of how far apart these things were when they diverged, okay? And then, of course, when it comes back through the other way right here, and now you say, okay, well, we're definitely looking for short positions on this pair. We're still in an downtrend. We've got structure levels sitting right here on the 4-hour chart. And then right here, the Euro line crosses back through the Aussie line. And there's our entry right on this candle right here. And that's a great entry. First bearish candle. And you can see the price goes and makes a new low and so on and so forth. We have another cross up right here. Okay, and that's our pullback. That lines up right on this pullback candle, the third one in here. And again, price goes up for, about a day or so and then rolls over again. Okay, so you kind of get the hint. Now, again, you can do this on any time frame. I mean, I don't trade short time frames, but I suppose if you wanted, you could trade this on literally any time frame because you're just trading like short-term momentum. On a short time frame, but obviously the longer you go out, again, the fewer signals you're going to get, but theoretically the better the signal will be. And again, any crossover is really good, but what you want to be on the lookout for is where they started kind of at diverging from each other. Okay, now this one, not exactly perfect because in this case, the euro peaked over here and the Aussie peaked down here. They're not always going to line up. They're two different currencies. But you can see as the Aussie started to strengthen, this is a 10-hour chart. You can see right where that lines up on this candlestick right here. Okay, the Aussie crosses through. Okay, after they had been pretty spread apart through here. Okay, you wait for that crossover to happen. Okay, because in this case, they were actually both kind of trending down, and then all of a sudden the Aussie turns and starts rallying back, but the euro is continuing down. You can see it clearly trending down, and then we get a signal right here on this candle, and then price moves down. Okay, so this is the 10-hour chart. I showed you on the 4-hour chart. I mean, theoretically, you could do it on a 5-minute chart. You know, right here, we've got the Aussie crossing through and, you know, strengthening and the euro weakening, you know, after this diverging period. So anywhere in here could have been an entry, and you can see price continues to go down and so on and so forth. So there's a 5-minute trade, a 4-hour trade, a 10-hour trade, so on and so forth. You can do it on whatever time frame you want. Again, understanding that the shorter your time frame, especially if it's a counter trend trade, that you're not going to be able to hold it that long, and just to be cautious. And I would say the lower the time frame you go, be more cautious on the on these counter trend trades, pullback trades, because they're not going to go as far. If the trend's ultimately going to continue, it's not going to go that far. But on a longer term, on like a 10, 12 daily chart, a pullback, a real pullback could go on for days. And there's no reason why you can't ride that, right? And pull a bunch of pips out. And then once the trend resumes, you can get back on the other side in the direction of the trend. You can really kind of go with the flow of the market, okay? So I just kind of wanted to show you this. Now, I had to pay this guy to create this for me, so it's not like a free indicator. But if anyone's interested, I certainly can connect with him, and he can decide if he wants to sell it to. He already did all. I mean, I already paid for all the work because I had to have him code this. Although he did it within a few hours, which was great. I thought he would take him days. Within a few hours, it was done, and I back tested it, and it's pretty good. I mean, pretty good in terms of the logistics of it. The only excuse me, kind of little shortfall is that it doesn't name the actual currencies. It always says pair 1, pair 2. Now, of course, you can change the colors, but it's very easy to tell, obviously, which one it is, right? This is the Euro-Aussie pair. So if it's going down and this line's going up, clearly that's the Aussie strengthening and the Euro's going down, which causes the pair to fall. So it doesn't put any labels on here, so you don't know, without looking at the price chart, which one is which, but that's perfectly fine. Very, very minor. And he has it coded, so it's either has to be overlaid on the screen or above. You can't have it down below. Just had to do with the coding, but I don't care whether it's above or below. It doesn't matter. In fact, I kind of like it above because the way I stand at my desk, my eyes are going right to this anyways, instead of having to look down to see the pane underneath the screen. And this also allows me to, I can adjust this and really scrunch it up. So if I really want to see the price action a little bit more, or if I want to see the indicator more, I just drag this around. So, it's very customizable. And if I want to just I just don't want to see it at all temporarily, I just shut it off and it goes away. If you just want to not be distracted by it for a minute, obviously, just like any other indicator, you can just click the little eyeball symbol here and it'll temporarily hide it. So I like to keep it, at an area where I can kind of see it. My primary focus on this is going to be still to use it on higher time frames. But as I go along here, I may look at it on a little bit shorter, nothing below 4 hours. I'm not looking to like day trade this thing at all. I don't have time for that. And, my primary focus is on futures. And obviously this is not anything I'm going to use on futures. It's just not applicable to those markets. It's just strictly for Forex. But it's a nice timing entry. Okay. It just helps with timing. It gives you an idea of when corrective moves might be ending based on the crossovers. It gives you an idea when the best setups could be forming based on how far apart the two lines are before they start moving towards each other. Like right here, we have the Aussie way up here, the Euro way here, and this is a 5-minute chart again. And there's no trade until this crosses over. So now the Euro is starting to come up, the Aussie starting to come down, but the crossover happens right here. And there's the entry. Now, of course, again, this is a counter trend signal, but look where the entry is, right? On the close of this candle is only one candle in from the start of this up move, and then it goes all the way up. Where does it end? Right here when the Aussie crosses back above the Euro again, right here. Okay, so right at this candle. So you would have theoretically caught from here to here all the way, okay? And from a standpoint of, let me see if I can move. Oh, I can. From a standpoint of pips, even on a 5-minute chart, that is, I mean, that's not a lot of pips, but this for a scalp, that's 38 pips. Not bad, for a scalp that lasted you about an hour. Now, again, I'm not really interested in, 5-minute scalps, but I'm just saying that you could do it that way. But the beautiful thing about this is you can do it on any time frame. And, here we are back on the 4-hour. We already talked about that. And, of course, it's very easy to go back and back test this thing, too. And, kind of see where you're at. Now, here's an example right here where the Aussie, the two lines come together right here, but they never cross. You can see they come up, they touch, and then the Euro pulls back down again. So technically there's no signal right here, right? And that would have, on this time frame, that would have actually saved you because the Euro did not strengthen much, right? It pretty much stayed the same. And then, okay, you got another signal here. We did have a little bit of move up, and then here's the crossover back down. Here's your entry right here. It's actually on this blue candle, and then you caught that move down. This is a 4-hour chart. And so if you got it from like the close of this candle down to the low of this candle, let's say ideal, that's 115 pips in in about 20 hours, basically one trading day, one trade, 115 pips. Okay. And so you can kind of see, where I'm going with that. So it's very easy for me, just to click through here. And obviously I've got to get used to visualizing all this, but to kind of look and say, okay, where are there potential opportunities? Here's an example. Even right now, we've got on this pair, we've got a little divergence right here, and you can see they've come together right here, but there's no crossover, so there's no signal right here. If this turns now and, the Euro starts bending down and this one starts bending up and we get a crossover here, then, that would, to me, would suggest a potential short opportunity. But right now we don't have it. And so that's fine. So there's no signal there. Even though it's trying to go down a little bit, it could very well be that this turns out to just be a corrective move and we continue to go up, right? These things diverge back again and that's it. So that's what you're waiting for. And right here, again, there is no signal at the moment. You can see the two of them came right together here, but they don't cross. And so there's no signal to go short right here. Remember, the orange line is the Euro and the blue line, in this case, the Kiwi. Oh, I'm sorry, this is Euro Kiwi, not Euro Aussie. Well, it doesn't matter. Okay, and so that's that. So again, that's the 4-hour chart. And again, you can do the same thing, on the daily chart. Same basic concept. Here's an entry right here, right? They cross over. The Aussie goes higher. The Kiwi goes higher. The Euro dips lower. There's your entry. Anywhere in here, you actually had two signals, one here, one here. Either one of them would have been fine. You would have just kind of sat in break-even territory for a short time, and then boom, look at this huge drop. Okay, so anywhere from in here, let's say, from here down to this low down here, that's 837 pips. Now, this is This is over 22 days, 22 trading days, 30 days. So that's a month. You would have been in that trade theoretically for a month, but it's 837 pips, and it's a 4% drop in the market. So that's really substantial. All right. So I just did want to point that out and let everybody know. If you're interested, let me know. Like I said, I don't sell this. I can't, necessarily share the script with you, but I just thought it was interesting because I did take what I thought was a good indicator that I found a couple of days ago and kind of customized it to be more useful for me. The gentleman that originally created the original version of this, if I go to the, put it back on the chart here, and I click this little 3 buttons and I go about this script, it opens this chart. And this is basically how he uses it, I assume. This is the original version. Currency strength indicator, CSI, 5-step scalp. And he's got this on a 15-minute chart. He's got an indicator up here, and you can see how much he has this blown up because you have to in order to see all these lines down there. You can see how he's got it really zoomed in. This is just a screenshot. He's got some kind of indicator up here called BBAWE. I'm assuming BB. This looks like a Bollinger Band, some kind of Bollinger Band indicator with buy and sell signals here. So he's got that, and then he's got a currency strength. Here's the 5-step one down here. And then he's got an 7-period RSI. And then he's got another currency strength indicator sitting here. I'm not sure what this one. Oh, this must just be, in this case, maybe he's got one coded just for the euro or whatever this pair is. In this case, CAD yen. And so he's basically doing what I'm doing. He's got one window of this as I'm assuming these are just the two currencies. But I just have it now, so I don't have to have all this other stuff, and I don't need to just put this on my chart and only select that one pair. I don't have to go in there and just unclick all the other ones and just look at that. I can just click through my pairs now and just see, and just see what I want to see on that particular pair. So that's kind of the modifications I've done on it. And then again, it allows me to keep the chart nice and clean. Still can see great market structure, my Heikinashi candles, or regular candles, whatever. And it just keeps this uncluttered. But yet I can just glance up here and say, all right, is there any divergence, in these, and are they coming back together? And is there a crossover potentially happening? And if that happens, then, I can look for potential opportunities. So, so that's about it. On the daily chart, actually, if we look at the daily chart, this is a good one to look at. Right now, we see this was as of yesterday, we saw the New Zealand dollar. This is the New Zealand, right? Yeah. Euro NZD. This is the New Zealand is crossing through the euro down, and the euro one's not really bending up yet, but you can see what's happening here after that little crossover. We do have a little bit of bullish strength on this currency pair right now, and so will this lead to higher prices? We'll see. What I would like to see on this, because again, I'm still getting used to this thing. And I have this live data feed checked off. So I'm going to uncheck it. Okay. Because what this does is the way he coded this is that it doesn't wait for the candle close. It adjusts as the price adjusts. And so I'm debating whether I want to use this or not. Because if you watch right here, right now the live data is on. So it's showing it this way. Now, if I turn that off, you can see what happens. It doesn't show the New Zealand dollar bending back up yet because this candle, now it's only going to update once the candle closes. And so it's probably better to wait for the candle to close to see what happens. But this is a potential long opportunity setting up on the daily chart, right? We already kind of had the signal yesterday. What I'd love to see is this euro one to bend up a little bit and suggest they're moving away from each other. But this is pretty good. And, we are in a downtrend here. So again, we'd have to be cautious of that. But theoretically, that is a setup. So there you go. There's one in real time. And let's kind of keep an eye on that one, right? And see if ultimately, we get a move higher if we just mark this one off, right there. And let's see what happens going forward. Again, I'm just getting used to using this. But, we did have a divergent period here, and then we have them both heading down right here, right? They tried to come together. Now they're both trending down, right? But now the euro seems to be bending up a little bit. It's kind of flattened. And so we'll see. So again, you can do it on any time frame, but, this is one way to do it. All right. So just jumping quick over to futures, just change the subject here, get away from that, and we'll move this up because it doesn't show on these charts. I don't even really need to see it. And we'll just do a quick review. And as I said yesterday, rice looked like it was really starting to make a move down, even though the commitment of traders is still quite bullish. And I don't have the template up here. But, the chart is still quite bearish, and this move certainly has been very bearish. Now, there's been no re-entry. This is the 4-hour chart. I was looking to see if we'd get a little pullback here on the Heikin-Ashi candles on the 4-hour, because, again, that's where I like to take my entries. I haven't had one, so this still has, if it's going to go down and even make the old lows, it's got a ways to go, so I'd love to see a pullback here. This is maybe one where I would use, like, the stochastic RSI, something like that, to kind of see the RSI come back up into overbought and then look to sell it then, or something to that effect. Okay. So soybean meal, oil continues to rally. Again, the last entry was back here. We did not have one today. Soybeans itself it's running into a lot of resistance as expected because it's sitting up here at these highs, and you can kind of see that on the 4-hour chart. I do have an alert here, which did trigger earlier, but I'm not really comfortable taking it given where price is sitting up at these old highs. I would suspect maybe we'll see a deeper pullback here. So I ignored this long signal, even though I did get an alert on this crossover earlier today. Actually, it's hit it a couple of times, which means it's pulled back to the alert and then back through again. So every time it crosses up through this alert, because that's how I have it set, crossing up, every time it goes under and then comes back through, I get alerted again. So it's been chopping around at this level all day, which again makes complete sense given the structure on the daily chart, sitting up at these old highs. So I'm a little bit hesitant to take a long position on that unless it breaks through there, or we roll over and we start heading down. So, which is always possible too. And on the Canadian dollar futures, again, still sitting at these lows, really has not made any progress below this zone. Even on the regular candlesticks now, we've had 3 daily touches on this level, and it's not been able to break through and either start heading lower again or reverse and start the uptrend again. And, the 4-hour chart is this. And again, it is trading down, but again, sitting back at these old lows right here and right here around the 73 level. So let's see what happens if we get a substantial breakthrough here, or eventually we start moving up. Canadian dollar loves to range trade. So, we could just head into a consolidation pattern here, but I'm not comfortable trading off of this level because the daily chart is looking more bearish because this is a lower high that was put in. But, until we kind of confirm and really take out some structure area, technically the structure is down here because this is what led to this high. But I would be comfortable looking for shorts if we can decisively get through this level, especially since it's had at least 3 bites at the apple here. So, all right. And on soybean meal, you can see I'm holding the market is closed now. So that's why you don't see a stop loss here. I don't know why, but my funded broker, because this is on my funded broker account, When the market closes, it erases your stop loss, which is not a good thing, because if the market reopens overnight really against you, you could be in real deep drawdown. So, but I am pretty confident this is going to go up. We do have bullish commitment of traders here. If we go to the 4-hour chart, I have the stochastic RSI on. You can see it's in the oversold area, and I would love, you can see it looks like it's trying to bend higher and come out of this zone. So my entry might have been a little early. My stop loss before the session was underneath this low right here, not this one. I had it a little bit lower under here to give it a little breathing room in case it wants to make one more little push down. And when the market reopens tonight, assuming it doesn't gap way lower and I get stuck in a big loss, I will reestablish my stop loss to underneath here and just let it run overnight. But I am still pretty confident that will go up. That's the only active futures trade I have. Corn, again, the COT for corn is bullish, but this thing has just been kind of dead sitting here, and it looks like it wants to go down. But here's the daily chart, 12-hour chart. But again, you know, there's some pretty good structure sitting right here. Hasn't really been able to make any progress, but it definitely looks more bearish here on the 4-hour. So I'll be interested to see if the if corn gets a commitment of traders update on Friday. If we put COT up here, change the template here. This is the shorter length one, and you can see it is bending up. It's coming out of this oversold area and started to bend up, which is why I said, even though it looks bearish, the COT is maybe suggesting we're going higher. And even the regular one didn't even make it down to oversold. So sometimes, you know, if the buying momentum is strong enough, the 26-week one, which is this one right here, the look back is 26 weeks, as opposed to this one, the look back is 10 weeks. You know, you can get this type of dynamic where the short one, you know, is more reactive. So let's see what happens. This easily could turn and go up, and, you know, we're just kind of accumulating around these levels or so. So that's why I do have a couple of alerts sitting here. Actually, I don't need two. So let me get rid of this one. And then I'm going to move this one down a little bit and just keep, you know, relocating it. And I'm hoping that, you know, sometime here we see a big, you know, bullish candle up through this level. And that would be a great sign to go long. But if it does continue down, that's fine too. I would just want to see a little bit more, you know, maybe another pullback, lower high, and then a move down. But we do have that right here. So on a technical standpoint, it looks bearish, but the commitment of traders, at least last week, was looking pretty bullish. And so, you know, we'll have to see how that all plays out. Okay. Wheat is continuing to move higher. We had no pullback here on wheat, so there was no trade for me. And oil, which, again, I'm not really doing much with, but commitment of traders on oil is pretty bullish, continues to be bullish. And so, you know, looks like we've taken out this old swing high right here. So a pullback here would on the 4-hour chart would be a really nice potential signal for a long. So I'd love to see this, you know, pull back down here and then, you know, look for a long position. But in the meantime, there's no trade for me here. It's just gone too far without a pullback. So all right, so that's kind of where things are at, just holding that soybean meal trade. I do have a couple of open positions in Forex on my funded account, long the Swiss yen and the CAD yen, and they are in some profit today. Those were not based on those currency indexes, although the CAD yen one, if you look at the CAD yen currency index, it does kind of confirm that trade. So I felt more confident about that. But I took those trades prior to starting to use that indicator. So let's see how those play out. All right, so that's it, guys. I'll leave it there. Hope everybody has a great day. Drop me a message if you have any questions. Make sure you like the channel, subscribe, and I'll talk to you soon. Thanks.